Right here. So tonight we are going to be looking at the head and shoulders pattern. It's considered by many, perhaps including myself, as the number one reversal pattern out there. There are other reversal patterns, but this is a very powerful one. I mean, when you say number one, you're not just speaking of something that necessarily occurs most frequently, but you're looking at something that is consistent with regards to delivering profits. So in my opinion, this is a pattern I tend to look out for, when, the price has been pushing in one direction, say if the price, for instance, has been, if the price has been pushing up, if the price has been, pushing up, as we know, it does a zigzag. It pushes up, pulls back, pushes up, pulls back, and so forth. So if the price has been pushing up for quite a while, at some point, it's not going to keep going back up. Instead, it's going to reverse and going to begin to form higher highs, and keep going down like so. So if the price is, pushing up in one direction, expect it to at some point reverse. So also if the price, started off, by pushing down or going down, as it were, you would expect that at some point it's going to now begin to go up. So that is basically what we'll be looking at today. We're going to be looking at, various I'm sure we'll have the opportunity to look at, some examples today, and like you probably have heard me say, if you've, been with me, for some time, or you've watched a couple of my videos, there is no pattern out there. There is no pattern out there. There is no strategy out there that wins 100% of the time. It's not possible. I have heard of people who say, their system wins 100% of the time. And I'm thinking, when they say system, what exactly do they mean? Are they talking about the strategy, the risk and money management and everything put together? But even then, I would not believe there is any system. Maybe that's a play on words, as it were. But nevertheless, I personally think that there is no strategy or pattern out there that wins 100% of the time. It could have a high winning ratio like this one, but even then, it does not win 100% of the time. As a matter of fact, we are going to be seeing today, I'm sure, some of you as well also know that even as you trade the head and shoulder pattern, it is the case that there are times when the pattern would not complete. It appears to start as a head and shoulder pattern that is developing, but before you know it, it becomes a failed head and shoulder pattern, and you just have to know what to do. So if you see a head and shoulder pattern developing, for instance, don't be bent on trading it as a head and shoulder pattern. For instance, you see the price here, even here. You see the price, doing a zigzag on its way up. You want to trade it as a head and shoulder pattern. You keep thinking it's going to reverse soon and come down this way. It does not. But somehow, because you are so adamant about trading head and shoulder, you end up jumping into a trade that you have no business jumping into, and it results in a losing trade. But anyway, let's just now have a look at this. We have a good setup here. Not so much, not necessarily for head and shoulder, but we're going to be starting with the foundation, as it were, of learning head and shoulder patterns. Think of this as we have it here. The price is doing highs, pulling back to form lows, highs, low, and so forth. That is one of the things that you should look out for when you have a head and shoulder pattern, or when you're looking to trade a head and shoulder pattern. You should be looking for swings in the market, swing highs, a pullback, or if you like, impulse moves. Impulse moves, a correction, continuation. You should be looking for that, and you would do well to find head and shoulder patterns. Okay, so even starting with this one now, let's just take this as the beginning of an impulse move. What you should do is to basically, place a horizontal line at, whenever you see the price push up like this and it pulls back. If you like, you see the price push up, it pulls back, forming resistance or forming structure. This is basically what we would call the market structure or price structure. When it pulls up, or if it pushes up and then it reverses, it basically creates a high, it forms a high. Now, okay, let's not be pedantic. You might say this is not exactly it's not exactly at the very high or at the top of the wick. Okay, that's fine. Let's move it to the very top of the wick. Okay, so it pushes up, comes down, creating a high, and then the market then goes up again, forming a higher high. So this was a high, came down, formed a higher high, and then it came down, it tried pushing up again. It did not quite go above the previous high. It came down all the way, pushed up again, and I would say, even though the wick is higher, even though the wick of this candle is higher than that of the previous two, it isn't much higher. In fact, you might want to consider the fact that it is just the wick. The body actually closed below. The candles actually closed below, the high of the previous wick. Okay, so I just, thought to quickly show us this, just to even show us what structure is. This is the pound JPY 4-hour candle, even as I'm sure we can see there. So let's move to a different time frame. Let's see if we can get a good setup for a head and shoulder pattern. Let's go to a higher time frame. Do note that we have head and shoulder patterns and we have inverse head and shoulder patterns. What we are going to be looking at, even going forward, for those who have not, been in a class where I taught head and shoulder patterns before, we also have the slanting head and shoulder, patterns. In a sense, you could say that is an imperfect head and shoulder pattern. So let's just, try and find, one here. We are looking for a pattern. Okay, you know what? Let's go to Aussie dollar JPY, Aussie dollar USD. Because we did, we had a trade recently on that one. Okay, well, it's still marked up. We are now going to, okay, just as a way of learning to use this tool, this trading view, you can see I have pulled my chart, to the left. If you wanted to go to the very beginning, you simply click on this arrow and it will take you to the very beginning. Okay. So what we're going to do, we marked up this chart. We had marked up this chart as a head and shoulder pattern, and you can see it basically has gone our way. But let's clear it completely. Let's remove that and see if we can find an inverse head and shoulder. Sorry, a head and shoulder. So you can see we started from below here. The price was going up. So if you're going to be trading a head and shoulder, you are most likely looking for an inverse head and shoulder in this case, because the price is going up. You are wanting to trade a reversal coming down. So yes, it's pushing up and until it got to this area. So let's now find a head and shoulder setup. There are a couple of them I can see, but let's look for a good one. So we can see the price doing a zigzag, is going up, coming down, up, down, and so forth. And here it pushes up, goes down. So what I would advise is whenever the price forms a high, in this case, if you are trading the opposite direction, it will be when it forms a low. But in this case, whenever the price forms a high, you want to mark up, place a horizontal line there. You want to place a horizontal line there because it's formed that high and it's come down. When the price now breaks above it, you could decide to place another horizontal line there. Now, let's see what happens here, because when this first high is formed, a pullback, when that horizontal line you place there is broken, it means this is going to form, it's now going to potentially form a head. So the first high will be taken as a possible left shoulder. You don't know yet. That's why I'm saying call it a possible left shoulder. When the price now comes down and breaks it, it means yes, a possible head is going to form now. Now guess what happens? The price came down, went back up. It didn't go higher than the previous high, and then comes all the way down. Now, when the price comes down like this, when it reverses like this, you can assume that a head has now been formed. So you have the left shoulder. The head has now been formed because it did not go higher. If it had come back down here like it did, and this one went higher, then this would have been nullified as a left shoulder. You would now take this as a new possible left shoulder. Don't worry, guys. I'm going to go over this, a couple of times if I have to, even to make sure we all get it. But let's start again. Let's start again. So we're not looking at, the prices below, because obviously we want to capture a head and shoulder that played out well. The price pushed up. When it comes back down, that is when structure is formed. That is when a high is formed. That is when resistance is formed. If the price just keeps on going all the way up and doesn't pull back down, a high has not been formed yet. So when the price goes up and at some point it stops and reverses, a high is formed. You basically go and place a horizontal line there, making it a possible left shoulder. The price now pushes above it. You are now thinking, oh, okay. It seems like a head is about to be formed. And guess what? It now pulled back, and you're there thinking, yes, I think a head and shoulder pattern is forming now, because the left shoulder has been formed, the head has now been formed. It pulls back, especially when it goes up again and it does not go above, it goes down. You now know, yes, a head has been formed. Now, I know some of you are used to seeing a different kind of setup that you will call a head and shoulder. We would find that as well today. This happens to be, we are starting up with, one which is a bit complex. Ideally, it would just be this one that would form the head. But on this occasion, it's like almost like a double head. It forms that, it goes here and goes high again. Fine, we're going to find one which is easy as well. So at least you can see the difference and know it. But it now comes back down here. This is now a head. Let me label it as we go along. Let's label it as we go along. Okay. An anchor text. Let's go with that. I call it left shoulder. So we can call this the left shoulder, and this will be the right shoulder. Okay, see what I just did there? I had put the left shoulder there. I basically cloned it, which is a way of copying it. Cloned it, went to clone. I basically right-clicked, went to clone, and I put that there. But let's put this aside for now. So this is now the right shoulder. Sorry, this is now the head. So we have the left shoulder, we have the head, and what happens, guys, because the left shoulder has to line up with the right shoulder. I mean, think of it, guys, when you think of a human being, the left shoulder and the right shoulder kind of like they are on the same line, so you would take it this way as well. The left shoulder, the head, it comes back down. You now wait for it to come back to that line which you drew, and that will be the right shoulder. Now, this is where you have an imperfect head and shoulder pattern, but that's fine. It doesn't have to be perfect. As long as it looks near enough what we are looking for, we are good to go. A perfect head and shoulder pattern would not necessarily have crossed above, by that much. But guess what? If you had placed a sell limit order, perhaps it was nighttime, you were going to bed, the price was still here pushing up. You are thinking, if it gets here, I want to be taken in, but I'm going to bed. I'm not going to be awake to view that. So you place a sell limit order and you go to bed, and you wake up in the morning, the price has pushed up slightly, and the price is here, this green candle, and you are there thinking, ooh, I hope it's not going to be a failed head and shoulder, because if it keeps on going up, it's going to go and hit my stop loss, which is just above the head. Oh, you are panicking now. But all of a sudden, boom, this red candle goes down. And then you are thinking, yes, we're in business again. We're in business again. And when it begins to come down like this, it keeps on coming down. You are there thinking, I got you. And hey, it keeps going down. And if you placed your take profit here, it comes and hits your take profit, and you are out of the trade. My goodness, a beautiful trade. Now, guess what just happened there? The price went up, came down, forming the left shoulder, which is structure or resistance. It then goes higher than resistance or breaks structure. Mind you, I suppose I didn't say that, but the head and shoulder pattern is traded using market structure. I know we explained what structure was, but I should have said it's traded using market structure. So the price now breaks structure and forms a head there, even when it begins to go down. Now, the buyers were a bit stubborn. They tried pushing the price up again, but it did not go up higher than the head. It came down, forming the head this time. And when it does that, we're now thinking, if it's going to go back there to that structure level, structure point, it's going to most likely reverse. But the fact that it broke structure there meant that it could have possibly been a failed head and shoulder pattern, but it was just a fake out. Oh my goodness. We ought to know that in trading, we want to be patient, because if you are entering up looking to trade head and shoulder pattern, you want to enter a sell for a proper head and shoulder pattern. You want to enter a sell at this level and place your stop loss above the head. Now, when some people would have seen this going up, they could have panicked and closed the trade. Well, what would you have just done? You would have ended up closing the trade with a loss needlessly. You know, those who know me very well know that I always use stop loss. And a lot of the times, I would not move my stop loss. I would not close the trade unless I have reason to. If this kept on going up, if I had to close it, maybe I could have closed it, around here, because I'm thinking, well, what's the point? I mean, at least I could save, an extra, a couple of pips loss. But not when it's just here. It's not even gone halfway between the head and the neckline, so the shoulder. It's not even gone halfway. So it pushes up and now begins to go down, and it comes and hits your TP. Your TP would be here. Your TP would be here. It will be, think of it this way. When the price went up that like so, and it came back down, this is where it stopped. And it's not surprising that this lines up with previous structure. Now, it's not bang on, but it lines up with previous structure. We know we take profit as structure. We enter as structure, come out as structure. Yes, you might give it a bit more, you might give it some buffer, some room to move, a bit of, room for the market to wiggle, but structure is where you have your eyes on. That's where you have your eyes on with regards to using, going for TP1, TP2, and so forth. And when it comes to stop loss as well, that is basically where you would have your eye on. So the market now went up, forming the right shoulder, perfect head and shoulder. Well, not quite perfect. We're going to look for a perfect one soon. But we still traded this, and it gave us the result. So what we're now going to do, let's just tidy things up here. This was one of the trades we entered, or we were meant to have entered. For those of you who did, I posted the chart in the Telegram group. If you entered, you should be in profit now. So this is basically what it looked like. Now, we want it to look good. So let's place it there. Head and shoulder. We can even place this there, or place it there, wherever. Yeah, let's do that. Let it look tidy. It doesn't look too perfect, but it gave us the result. The pattern No pattern will be perfect. No setup, you will not always find a setup that is perfect. Whether you are trading using harmonic scanners, whether you are trading the engulfing candles, head and shoulder, trading wedges and flags, it will not be perfect all the time. Sometimes it will just be perfect, but on some occasions it will not be. But guess what, guys? We can still pull up our tools here to draw it the way I want us to begin to do now. So I would say after tonight, obviously, to go back and watch this video and watch the previous video as to how to use TradingView, because you are also going to be marking up your chart and posting it for all to see. And like I told you, if you don't post any, I will call you out and ask you to find a head and shoulder pattern or an inverse head and shoulder pattern and say, mark it up and post it in the group. I will call you out. I will call you out. Now, listen, guys. The reason why we are using TradingView here is because it makes it easy for us to mark up our chart in certain respect. What we cannot, do on MT4, we can do a bit more easily here. So these are obviously the different tools. These are the different tools. We have used the trend line. What's it called? We have used the horizontal line, which is here. If you click on the side of it, you can see it shows you other things which you could use. Now, what I want us to do is to create, create what you would call, favorite tools. This one is already chosen. Trend line, you can see is up there. Let's add some more that we will use often. Not so much any of this just yet. Okay, there's trend line. Let's also go for horizontal line. So basically, you come to the end of it and click on that star. It will be yellow. It's been added here. Okay, let's now go to this bit. This is for rectangles and other shapes. You open it up. We are going to be using rectangle. Let's add it to our favorites. We are going to be using polyline often, not so much any other one, so that's fine. Now let's go here as well. Well, long and short position, but we'll leave that for now. Let's go to the next one. Okay, we'll leave that for now. Right. Okay, so what we're now going to do is to draw a head and shoulder pattern. We are going to choose head and shoulder pattern, add it to our favorite tools there. You click on that, it's added. Okay, so let's go. So to use the head and shoulder tool, you basically would start, at some point here where the push started. It's going to draw a head and shoulder for you now. So you click on here, you drag it, click, take it lower, click. Now I could do it, I could click it here, but because we have like a double head, I'll put it in the middle. And then you can see what's happening here now. I come to the bottom, I go there, and I come here. Okay, now see what's going on here. You can see only this middle triangle is colored. The reason why is because I need to drag this handles lower. If you drag it lower than that line, you can see it has now been painted inside as well. I'll now need to come and drag this one here as well. Drag it lower. You can see we now have a head and shoulder pattern. Well, it does not look brilliant, but it has given us the results. Let's go on and delete that. That's your head and shoulder pattern. Now, the beauty of head and shoulder pattern is that you can basically trade them, either way. Now, even if I wanted to enter, go for more pips, I could have done that, but at least here we see we've gotten, our profits, whereby the price came to the baseline, the neckline. So with the head and shoulder pattern, you would have the left shoulder, the head, and the right shoulder. The bottom of it is known as the neckline. Now, when the price breaks the neckline, you could actually think of getting in for a sell. After all, it is a reversal pattern if you think of it. The price was pushing up all the way and it formed this pattern, which is a reversal pattern, which means it could have given you even more pips. You didn't have to stop at just the neckline, but obviously you will have to know how to trade this pattern. Even as we go along, we will find out some more, because on this occasion, it didn't just go down, it didn't reverse up and keep on going. It basically pushed up again. But guess what? You could have gotten more pips even with this. You could have gotten more pips even with this. Let's just measure how many pips would have got on this trade, this AUD USD on the 4 hour, on the 1 hour. The tool you will use will be this. This is for measuring the number of pips. If you click on it, since you placed your limit order here, your sell limit order, click on it and just take your hand off the mouse and bring it down. You can see there, you would have gotten at least 42 pips. Whoa. Now, I told you guys, some of us are used to scalping for 10, 15, maybe 20 pips. But I want us to begin to move into going for more pips now. Targeting more pips of, say, between 30 and 60, depending on the time frame you are trading. You see, with most major pairs on the 1 hour time frame, you can actually get anywhere from 25 pips to 40 pips. We see we got more than 40 pips here. We could have gotten more. I don't want us to get greedy, but one thing you could have done is, if you have placed your sell limit order here, because head and shoulder patterns tend to be consistent. If you had done maybe some further analysis looking at a higher time frame, you could have entered again somewhere above your first entry. So you would basically have two entries. So in that case, this could have been your first entry. Maybe this your second entry, if the price moves up, say by 10 pips or 15 pips. Okay, yeah, that's about 13 pips. That's fine. When I trade head and shoulder, I usually would seek to enter after the price has moved by maybe 15 pips or so. If I really want to make sure that if I don't want to risk too much, I could let it go up to 20, maybe come to where I would have placed my stop loss or close to it and get a second entry. I mean, in this case, if this was your first entry, if that was your first entry and you were placing your stop loss here above the head, that would have been a 45 pip stop loss and more or less a one-to-one risk. 44 or 45 pip take profit and 45 pip or so stop loss. So that would have been fine. So if you had entered here, place your stop loss there, that would have been fine. If it was the case that you took a second entry, you could use the same stop loss, whereby you could enter here or even here and go for a stop loss of 45 as well. And believe me, most of the time, you will most likely win. Anyway, like I say, perhaps if you had looked at higher time frames, or you see that the price, even in this case, has been coming from a mighty long way. Now look at that. The price has been on a big rise. My goodness. From here, it's just been going up, almost for eternity. So at some point, it's going to reverse and you'll be looking to trade it. We've just marked it up now on the 1 hour, but we traded it on the 4 hour. And we are going to look at the price quite closely. And as a matter of fact, even as we are here now, I can see there is another head and shoulder. So you could have taken this trade and won it and taken another one. Let's go back here. Okay, fine. We have the favorites here now. We don't have to even use that. Click on the favorite. Let's do this. A second head and shoulder pattern. You see that? You see price reversed as structure. My goodness, if there is anything to take home today, it is the fact that market structure tends to deliver good result. Getting in at structure or near it usually delivers some good results. So we see here, having gotten some pips on this side, as a matter of fact, you could have gotten an inverse head and shoulder here and gotten the pips as well. I hope you guys I hope you are thinking what I'm thinking now. Do you know you can stay on 1 or 2 pairs and just milk the market almost non-stop? Almost non-stop. Now think of it this way. This day, looking at the bottom here, that was the 21st of January. So, okay, by 21st of January, 11th of January, you got a winning trade. Again, by the 22nd, which is like, that's 11th, by 11 days after, you got some more profits. And if you traded this inverse head and shoulder, you got profits as well. So you traded it going up, collected your pips, traded it coming down, collected your pips, going up again, collecting the pips, going down, collecting the pips. I could go on and on. Look at this, guys. Look at this. Look at this. There is also an inverse head and shoulder here. Why? Because the price dropped, went back up, forming the left shoulder. It now came back down, forming the head, went back, came back to structure, and boom, you got your pips. So we have the regular head and shoulder, and we have the inverse here. You could have traded the same thing here, structure, pull back, head, pull back, right shoulder, boom. Now, I know you might say, oh, this does not look perfect, but like I say, it does not have to look perfect as long as you have an idea of what structure is. Because the thing is, if you think of the fact that this has a long wick, you know what, I'll come back to this one. Let me just do this one first. So with this one, you it formed the head, went down, formed the, left shoulder, formed the head, came back down, formed the right shoulder, and you took it up. So you can see an inverse head and shoulder. Now, let me show you this. Let me show you this. We see here, this is what you would have taken as the left shoulder. It went up, came and formed the right. Because remember I told you, when you see the price gets to a certain point and reverse, it forms a possible left shoulder. When price now breaks below that structure, that is now a possible head. If it breaks below it, it's a possible head. If it carries on going down, then obviously a head has not been formed yet. It's only when it reverses, a head is formed. So what I was getting at here is that you might see a wick like this. And you are thinking, okay, you know, I wish the wick was not this long, but that's fine. You placed your wick there. Even if you had decided to place it here, it would have still been okay. Because the thing is, this shoulder did not come as low as this structure, but it still gave you your desired result. Some people would decide to use they will go with the wick. Others will go with the body. The body as in where the wick starts or stops. So others might say, okay, fine, I would use this as the possible left shoulder, wait for the price to go. Now, if you are looking for perfection or perfect price or chart patterns, you'll be here all day. Others will be getting 5 trades in a day, and you are struggling to get one because you are looking for that perfect setup. Okay, we know in trading, it's good to have it sometimes as an area or a zone, as opposed to being pedantic and saying, I'm going to wait for it to, I'm going to use the tip of the low. Just use it as a zone. Do it this way. Perhaps you could say, let me go for a rectangle. Let me just go for a rectangle. If you don't want to use the whole wick, you can say, okay, fine, let me place it 50% of the wick. Let's do that. Instead of using the very low of the wick or the body and missing the trade, let me just use the middle of the wick. So now I know this area, yes, is broken below it, but this area is the left shoulder. The price broke below structure, forming the head. It went up there and it came here, boom, gave it the right shoulder that took the price up. I'm going to pause the video now, guys, and I'm going to pause the video and basically see if there are any questions. But before I do that, let me also show you something. Now think of this rectangle I just drew. That's where is it? That's the tool for it. I put it as one of my favorites. I could draw this. Yep, I could do that. I could extend it to the right and to the left, for till eternity. Well, watch this, guys. I come here and see those handles. I hope you can see it. Let's see. I hope you can see it. I hope you can see it. So I right click there. I go to settings. I go to settings. Just watch this rectangle below. There are two there. Watch the one below. I go to settings. It brings up this box. I go to coordinates. Sorry, I go to style. And if you click on extend right, see what happens? See, it shoots it into the future. You can keep going forever. It will be there. So also you can shoot it to the left as well. Settings, extend left, and it goes to the left as well. Okay. Oh, okay. Now note, I chose the end of the triangle. If you have chosen any other part, if you have clicked on any other part, it might not necessarily have been able to do that. Okay. Okay, anyway, let's leave it at that. So this is basically how you would draw your head and shoulder pattern, even using the tools we have here on TradingView. Wonderful, wonderful, wonderful. I can see a lot more chats, popping up on our Telegram groups now, because we trade together and we win together as a team. We are a winning team. We are a winning team. We are a winning team. Okay, nice one. I mean, some questions have come up, and let's just quickly, tackle them one after the other. One of the questions that was asked is basically, is it good to use a one-to-one risk reward ratio for trading the head and shoulder? Yes, it is. It is good. After all, it's meant to be, the number one reversal pattern. So it basically means that apart from, being able to find it on your chart regularly, you are also able to go in with confidence, knowing that a lot of the time it would deliver the result. I would say if you do it well, you would win 70% of the time. Well, more than 70% of the time if you do it well. That is some good ratio of probability or possibility, if you want to call it that. So yes, you can use one-to-one, but you can definitely go for one-to-one, even as the setup we just saw there, whereby let me close this, guys. Now watch this space, the right-hand side. This right-hand side that has my watch list. If I want to close this window, you basically click on there. You click on here, it closes that. So if you want to consider this trade we enter, this sell position, whereby we enter the trade here, we usually would trade head and shoulder, as a measured move. A measured move. Basically meaning if you pick it up, if you measure from the head, that's the tip of this triangle, to the neckline, you can basically trade it going down as well if the price breaks the neckline. Okay. So first of all, let's start off with the initial trade. I mean, obviously the break of the neckline is the second entry if you want to take a second entry, but the first entry was here at the neckline, at the left shoulder or structure. From here to here is how you would trade it. Even as we have seen on this one, it was a one-to-one. You trade from the structure, the left shoulder or the shoulder level, to the neckline. If you were going to enter another trade on the break of the neckline, it would then be a measured move. A measured move in a sense, if you measure from the tip of the head to the neckline, that's the same distance you will target. So let's measure that. Let's use the trend tool, the trend line tool. Let's just do this, guys. Okay. So I hope we can, oops, sorry guys, I hope we can see that. Let me just, oh, sorry guys, I'm just basically trying to see if, just 1 minute, just 1 minute. Okay, so let's have another, have a look at another pair. Let's consider, I mean, this one is, you know what, let's save this, I think. We'll save this. Let's take this off. let's save this first. Okay. Oops. Sorry, guys. Sorry. Okay. All the previous ones have come up. I want to take this one off. Okay. Let's take that off. What we're going to do is open up pound USD. Pound USD. Pound USD. Okay, so this is a pair that John sent to me. A possible, okay, I think it was a 4-hour time frame. Let's see. It was 4-hour time frame, wasn't it? Yeah, it was a 4-hour time frame. I mean, I can see, even on the 1 hour is setting up as well. But let's go to the 4-hour. Okay, it's okay. I mean, on the 4-hour is setting up as well. That's fine. I mean, it will look more beautiful on the 1 hour. But looking at this now, it could be okay. So what we're going to be looking out for is a possible right shoulder here. So we are taking this as the left shoulder came down from the head, came down, and at the moment is pushing up. So we should be looking for an entry here. Now, when it comes to trading the head and shoulder, guys, I mean, one thing I would also say is you would have to decide if you want to use a limit order. I mean, obviously, if you are going to bed or something, or you are going out and you're not going to be there to place the order to enter the trade as market execution, of course, you would then have to place a limit order. In this case, you place a sell limit order so that even while you are away from the computer, if the price gets there, you want to be triggered into the trade. And hopefully when you come back, the price would have dropped, the way you wanted it to. So yes, this is a good, sorry about that. This is a good setup, setting up nicely with the head, sorry, the left shoulder, a head, and a possible right shoulder. Now, obviously, we have confidence in this trade that yes, it will most likely deliver the goods, because look at this structure. There was a previous structure point here. So we know if this price gets here, it most likely will reverse. It most likely will reverse coming back down. But even if it breaks it and carries on up, it's a failed head and shoulder. We can actually decide, if we see it happening, we can decide whether to trade it as a failed head and shoulder and take the small loss on the, or take the small loss and just continue with the long position. So that's basically how we'll trade this. Now, this is the 4-hour time frame. Like I say, it looks, I think it looks perhaps more beautiful on the higher time frame. And guess what, guess what, guys? Guess what? We looked at the previous setup a while ago, and I said it didn't look too brilliant or pretty. It seemed to have had a double head. But see, this one has like just the one head, in the sense, shoulder, come down, and it basically, as opposed to it coming down here, going back up to test that high, and then coming down, whereby we have, two heads. Obviously we know it won't be perfect all the time, but it is still tradable. Now let's take this to the 1 hour and see what we can do with that. Okay, so we see here. So we see here on the 1 hour, it's still more or less the same setup. The left shoulder, in this case, where we've placed it is like, in between the two highs, but that's fine. Even if we decide to work with this, because initially you could have taken this, but since this one formed, yes, you can decide to go with this one, or just place it in the middle, because it is the same high anyway. The same, is a level, equal levels. And yes, so thanks, John. We're going to be keeping an eye on this one and get a possible trade out of it. But as we do trade together during, we do trade live, during the week together, I would be showing you the various nuances we have with this, or whenever it's most likely going to be a failed head and shoulder pattern or a perfect one. So yes, that is, I think we could leave it here, like so today. I mean, I will basically, see if there are more questions, and we would call it a day. I think it's been a good session today. I'm sure we've gained a lot.